Right, good morning, traders. This is Trusted Emmanuel. How we doing? Has been trading. It's yet another episode. By the way, this is 22 of June, 2026. And on my chart, you'll be looking at volatility 51x. On this episode, I'm going to be your friend and your tutor. So we want to do a breakdown analysis, a kind of a top-down analysis on these particular assets. We want to know what is currently happening, so we'll be able to catch potential trades. And I'm going to be teaching you a lot of things. We're going to be doing a massive breakdown on this particular asset. Sorry about that. So we're going to be doing a massive breakdown. Like this video is going to contain a lot of information. Whether you're a newbie, whether you're an advanced trader, I tell you, you're going to be blessed. Just do well to follow me carefully, and as I teach, just do well to follow me carefully. Yeah, just do well to follow me carefully as I teach. It's going to really transform your trading, how you analyze the chart, what you are looking for in the chart, and all of that. So I'm going to be teaching a lot on this episode. So, all right, please. And if you are just joining me for the first time, probably you are just coming to this, you are coming to know me for the first time. I am Trusted Emmanuel. I do weekly analysis. I do daily analysis. I do top-down analysis. I do market review on my channel, and I teach a lot of things. I can respond to you. I can answer whatever questions you have as far trading is concerned. So if you are just seeing this channel for the first time, do well to subscribe to this channel, smash the notification bell, so whenever I post things like this, you will be able to see it. You'll be the first to see it. So on my chart, we'll be looking at volatility, synthetic indices. I know many of you are not. I come to understand that some traders are really not into forex. They are not into crypto. They just trade volatility indices. So, and this is volatility 51x. So, and this is a monthly chart. We'll be looking at what is currently going on the monthly chart. So follow me carefully, so you're going to learn. At any point you got confused, pause the video, reflect on what you heard, and learn, backtest, just learn and come back to the video. I think that's going to help you a lot. So I haven't said all of those things. Welcome to this channel. And on my charts, it's a monthly time frame, and as you can see, we had this massive drop from that high, this massive drop to the downside. This is so massive. Let me check what is going on the yearly time frame. Let's see. So as you can see, we had that massive drop, and this is the monthly. So we had that massive drop, and we left a lot of imbalances in the market. If I should use this Fibonacci and this fair value gap tool, we left a lot of fair value gaps, like a lot of imbalances in the market. There are a lot of imbalances here. Imbalance are fair value gaps. So this is a gap. This is a gap here. We have a minor gap, a small gap there. Very, very important to know. And we have this fair value gap, this gap. And if you look at this level here, this level here, we have an IFG. That is a fair value gap that was invalidated. It's called an IFG. So it's called an inversion fair value gap. So if a fair value gap is invalidated, it becomes an IFG. So basically, we want to see price return back into filling at least 50% of this range. Yes, like at least 50% of this range on the monthly time frame before we can see a drop to the downside, taking out these relative equal lows here to the downside. So having this in mind, let's use the Fibonacci tool to know where the 50% fib level is. So as you can see, I think I was right. So we want to see price reach out to that zone, this zone here, 50%. And if this gap, this fair value gap fails to hold price, then we want to come for this inversion fair value gap. This guy here want to come for this fair value gap and we drop. So basically this is what I'm seeing on the monthly time frame on this guy. So as this pullback started, let's see if this pullback has started on the monthly time frame. This pullback I was talking about into that premium zone. Let's see if it has started. So on the monthly time frame, let me zoom in. Now let's do top-down analysis. I tell you the truth, you're gonna learn a lot. So on the monthly time frame, we had a sweep here. Look at this low. Price came down, created a swing low. This is a swing low, and price came and swept it. All this entire candle failed to close below it. So we call that a sweep of market structure. Yes, we call that a sweep of market structure. And after that happened, price rallied up. We closed above these two candles high. Price rallied up, came back into this demand zone. There's a demand zone there in form of an order block. This guy actually cleared this low. Or let's make use of this particular sweep here, this last sweep that happened. Yes, I think this is the major sweep that really happened. All other things there are very, very important, but I think this is the main sweep that happened. After that sweep happened, after this candle swept this low, we saw this rally up and price came down to create this structural liquidity here, and price rallied up. Then we came down, we took out this structural liquidity, as you can see, took out that structural liquidity and we react to whatever that is here, we react to whatever that was there, and we pushed up, breaking market structure. So let's take this off and truly highlight all of these things. As you can see, we took out this structural liquidity, and this structural liquidity is a sweep on its own because these two candles, none of their body feel closed below that swing low. So I want to call this a sweep. I want to call that a sweep. As you can see, and price came down, react from whatever that was there, and we pushed up to shift structure. So we had a market structure shift here. This is not a break on market structure, it's a sweep or a market structure shift. Sorry to say market structure shift. So we had a market structure shift there. So we had a market structure shift there. After that price has taken out this low, we had a market structure shift. And if you can see from this place, we seeing a sort of a structural liquidity. So if you remember the same thing that happened here, these things, it repeats itself, like it's just like a pattern. It repeats itself, it's just repeating itself and all of that. Remember this sweep we had here, and price rallied up, created this structural liquidity and rallied up, came back to take out the structural liquidity, react to this wick here or whatever that was there, maybe on the lower time frame, you're going to see it clearly. And we pushed up to take out this low, this high, shifting market structure. That's the same thing that is happening. That's the same thing that is happening right here. As you can see, we had a sweep here. we had a sweep of this low, and price went up, failed to break above that high. Then we went down, creating this structural liquidity, the same structural liquidity that was created here, and we created this structural liquidity and we pushed up. We pushed up. So now, having this in mind, what do you think will happen with what has happened before? What do you think will happen? So we want to definitely see this structural liquidity taking and price probably reacting from that other block, and we push up. So what I'm seeing is this guy, I will call it a structural liquidity, or call it a AXL, structural liquidity, and I will call this guy an order block, or call this guy an order block. So as you can see, this is an order block. So basically we want to see price return into that order block and we push higher, isn't it? So the same thing that happened here. So all these things, they are just repeating themselves. Yeah, repeating themselves. It's just like a pattern in the market. If you can settle down and identify these things, I think you'll be fine. So this is the high we want to get to. This is the high we want to get to. Should I say that is the external range liquidity we want to get to? Now, having this in mind, so we all know that price should probably find a sort of resistance here, and we dropped down into discount zone. We don't want to buy from discount, from premium. We want to sell from premium. We don't want to sell from discount. We want to buy from discount. So price is still at the premium zone. If we use our Fibonacci tool to measure from this low to that high, you see price is still at the premium zone. So we want to see price find a sort of resistance around that level. We don't know yet, and dropped down into this discount zone, taking our structural liquidity. So on my watch here, with what I'm seeing, there are two things involved in this thing. Like, there are two things involved, because we just react, we don't predict. As a trader, your job is to react to price action. You don't predict price action. So we can see, with what I'm seeing, let me take this fair value gap tool off so that the chart will be clean. So this is the 50% level, isn't it? But with what I'm seeing, I think we are having two POI here. This is one, this is the other block, right at that discount, and this is an order block too. This is a demand zone inside that discount. So you have to really, really be careful, because price can just give us some sort of push up, return back into this zone, and continue pushing up. You get it right? And continue pushing up. So if you are this kind of trader that you know what you are doing and you know what you are looking for, I guess you will definitely catch that trade if it happens like that. And on the other hand, price can push up a little bit, drop down into the discount, this other block here, and we push up immediately. So between that other block and this other block, the both of them, they are very, very much powerful. Reason because they have a fair value gap. Let me put on that tool again. You see, this other block here has a fair value gap, and this other block leads to a break of market structure. So for an order block to be valid, it has to lead to a break of market structure, and it must have a fair value gap. So this order block leads to a break of market structure of this particular high, this high here, and it has a fair value gap. This high to this place is a gap and price is currently reacting off that gap. So this order block is valid. Is valid. So price can do what I said, come here, push up. And this order block below is also valid. It swept liquidity here. Yes, as you can see, swept liquidity, and it has a fair value gap. This gap here is a fair value gap, as you can see by the right hand. You've seen that fair value gap, and it leads to a break of market structure. So the both fair value gap, the both order block are valid. So our job now as a trader is to react to the particular POI that gives us an entry. Yes, sorry, is to react to the order block, the POI that gives us an entry. That's just our job. We don't predict price action. We react to price action. So on the monthly time frame, we know that price is currently bullish, but we want to see price drop down into discount zone before we can take a trade. We want to see price drop down into discount zone before we can take a trade. So let's move down into the weekly time frame to know what is really going on, to know what price is doing. So as you can see on the weekly time frame, as you can see, price is currently bearish on the weekly time frame. Price is bearish on the weekly time frame. Reason because if you check closely, let me zoom in closely so we'll see this clean. We'll see this. So at this high here, we took out this high. This particular week, is it Monday 23rd March 2026? Monday 16th March 2026. We took out that high there. See? Now that's just like a candle range there. There's a candle range there because we took out that high. There was a sweep of market structure there. So I want to call this a sweep, a weekly sweep. So I want to call that a weekly sweep. I want to call this particular high a weekly sweep. There was a weekly sweep there. And immediately price took out that guy. We came down. We did some sort of consolidation. We went up. If you are very, very good in what you know, you would catch a sell there around that level. You will catch a sell around that level because we had a sweep there. Immediately price dropped down, taking out this low. Immediately price dropped down, taking out that low, and we had a market structure shift there. We had a market structure shift here. So are you getting these things? We had a market structure shift. So now on the weekly time frame, we are currently bearish. We are currently bearish on the weekly time frame. Remember, I said we want to sell on the monthly time frame. We want to sell, like I said, we'll be pushing up a little bit. Then we'll find some sort of resistance around that zone. Then we push down, isn't it, into discount zone. Either we use this order block here, or we use this order block, depending on what price action is doing. So our job is to react, not to predict. So now on the weekly time frame, we had a market structure shift here, and currently now, so this is now a low. This guy now is a low, is a swing low, and that is a swing high. So if we're taking our Fibonacci tool, remember to always use your Fib to check, because you don't want to sell from discount. You want to sell from premium, and you don't want to buy from discount. You want to buy from premium. So if we're making use of our Fibonacci tool, I think this is a swing low, and this to that high, and this is our 50% Fib level on the weekly time frame. This is our 50% Fib level around this guy on the weekly time frame. So we want to see price run into that high. Yes, we want to see price run into that high into premium zone around this guy. Anything here that can hold price and will drop down to take out this low, and will probably get down to that side. So basically this is what we want to see. Now if you look closely, let me take this off. Let me take this off so that the chart will be clean. So if you look closely now, there's a breaker block here. This guy, this other block that was invalidated is a breaker block. Is a breaker block formation. There was a breaker block formation there. That guy that was invalidated. And if you look closely, there's a fair value gap there. Meaning that breaker block is really having a fair value gap here. There's a minor fair value gap there. There's a gap there, and there's a gap here. There's a fair value gap here. So now price is currently reacting from this fair value gap, from this gap. So price is currently reacting from this gap here, as you can see. So the thing is, we want to see price either fall from this place, or we want to see price move up into premium zone, and fall. So we want to wait for price to get to premium zone. We want to wait for price to get to premium zone. We don't want to sell from this guy. We want to sell above. So we'll be buying here. Like we want to see price drop, giving us an entry. Then we push higher into premium zone. Probably that fair value gap, this breaker block, anything, any POI that holds price, then we'll push down to the downside to take out this low. So all these things are just, we'll be reacting to it. If it happens, fine. If it doesn't happen, fine. But this is exactly what I'm currently seeing. These are analysis. These are just analysis. It's just what I'm saying. So now, what will engineer this push up? Like, what will engineer this push up? Like, what will make price push up to that side and will push down? You know that price is currently reacting in a fair value gap. Price is currently reacting in a fair value gap around this side. Coming. So there's a fair value gap. That candle low to this candle high, it's a fair value gap. And price is currently reacting there. And inside that fair value gap, a lot of things is happening there. So inside that gap, we want to see price move up into premium, then we drop into taking out this low. So this is exactly what is happening on synthetic volatility 51x. This is just what is happening. Now, we already have it in mind that on the monthly time frame, price is bullish now, but on the monthly time frame, we want to continue the bullish movement from discount zone, but price is currently at the premium zone on the monthly time frame. So we drop down to the weekly time frame to look for bearish confirmation, and we saw that price has already took out liquidity above that high, and we had a shift in market structure, and price is currently at discount zone. We want to see price move up to premium zone before we can follow the trend down, taking this low and all of that. So me, basically, what I'll be doing on this assets, I will be buying into premium zone. Yes, let's take these things off. Let's leave the breaker block there. So I'll be buying into premium zone. As you can see, price is currently reacting from this fair value gap, and I want to see price move up to premium zone, then we drop, isn't it? So we had a sweep here. The same thing you are looking at, the same thing we looked at monthly time frame, the sweep, the structural liquidity. Price took out structural liquidity, and we we enter the trade and all of that. So that's the same thing we want to be looking at on the weekly time frame. So that's the same thing we want to be looking at on the weekly time frame. And on the weekly time frame, we had a sweep. We had a sweep around this side. So sorry about that. We had a sweep here, and I want to call that. I will call that a weekly sweep. I'll call that a weekly sweep. So if we're having a weekly sweep, we want to move down to the what they call it now, the 4 hour time frame to look for entry. If we're having a monthly sweep, we want to move down to the daily time frame to look for entry. Now we have a weekly sweep here. We have a weekly sweep here. We'll go down to the 4 hour time frame to look for bullish movements to the upside. At least that breaker block. That breaker block will be our draw on liquidity. So this is the sweep we saw. This is the sweep we saw. Now, as you can see, this is the sweep we saw. So that is the sweep we saw, and we saw how that price shifted market structure here after taking out that low. This is the high that took out, that causes that sweep. And we saw that price took out market structure there, and there's a structural liquidity below. As simple as that. There's a structural liquidity below this guy. So that guy is a structural liquidity. Let's call this a market structure shift. Market structure shift, and let's call this a structural liquidity. So you can see this, isn't it? Now we want to see price return back into taking out that structural liquidity, reacting from this entire order block. So as you can see, we want to see price do things like this. Now, this is already a confirmation. If price gets to this place, if price drop down to that zone, from that zone to the downside, I want to see price taking out the structural liquidity, and I'm going to take a trade here, and I'll be taking my profit off that breaker block. So let me screenshot this. It's one thing for price to do this. Let me save that. It's one thing for price to do that, and it's another thing for price to do something like this. It's another thing for price to do something like this. We might see some sort of price action like this. You see price coming down a little bit, failing to take that low. You see something like this, and we have a break up market structure. What I'm literally seeing, I'm seeing an A plus setup. This, for me, this is an A plus setup. I will call this a break of market structure. Yes, I will call that break above. I will call that a break of market structure, a BOS, and I will call this a structural liquidity. That is, if this happens, I will call this a structural liquidity. I'll call that a structural liquidity. Then I would want to wait for price. Yes, I want to wait for price. That is, if we didn't get to the premium zone. Remember, we're actually trading into weekly premium zone. If you remember the analysis we are doing so far, we are trading into premium zone. We want to buy into premium zone. So I will wait for price to get here, taking out this low. Then that entire range there, is going to be my focus. Like, I'll be taking my trade from that entire block, this entire low. I'll be taking my trade there. So let me also screenshot this. Let me save this. I'll be taking trade there. But if this did not happen, because we want to react, guys. If this did not happen, then we want to see price. If this did not happen, we want to see price come for this structural liquidity. Yes, we want to see price come for that structural liquidity. We want to see price come for that structural liquidity, and we have a nice entry around that level, around that other block there. So this video is kind of long, but I believe you learned a lot of things. So just your Excel should be just below that low, and your take profit at the breaker block. So I'll be taking this trade. I'll be taking this trade. Let me save this. So we started from the monthly time frame. Let me give you a recap. On the monthly time frame, we saw sweep, a market structure sweep. We saw how that price broke market structure, gave us a market structure shift, and we want to sell into discount zone and buy. So on the weekly time frame, we saw that price has shifted market structure, and we are looking for a sort of a sell from the weekly time frame, a buy to sell scenario from the weekly time frame. And on the 4 hour time frame, we are actually seeing a high probability setup. So this is a lot. This is a lot information. I believe you found this video helpful. Please, you can share this video to your friends. And if you are just joining this, if you're just seeing me for the first time and you haven't subscribed from the start of this video, you can also subscribe now. I believe something has changed in you, your trading, the way you do analysis and all of that has really changed. Just subscribe, hit the notification bell, so whenever I post things like this, you'll be the first person to see it. All right, this is Volatility 51X, and I am Trusted Emmanuel. Thank you so much for watching. Trade safe and stay safe.